JJ the CPA here. Hope you're doing well. The Employee Retention Tax Credit. Let me show you how powerful this is right there at the bottom that I'm going to walk back through with you. I'm a CPA practicing 28 years. I'm doing this with my clients, calculating it, submitting it to the IRS. Pretty powerful. In this example, which we'll end the video with as well, 4 employees, each making $1,000 a month. So that'd be $4,000 a month in payroll W-2 wages, $12,000 for the quarter in 2021. That's the credit we're talking about. That would be 70% credit. That'd be an $8,000 employee retention tax credit for the applicable quarter. If a business were to qualify for all 4 quarters in 2021, because it's available, all 4 quarters in 2021, assuming the payroll is the same each quarter, that's a $32,000 employee retention tax credit. This is real money, okay? Just because it's complicated doesn't mean you skip over it. Just because it's complicated doesn't mean that you don't seek help in making sure you're taking advantage of this, because here's the deal. What's the requirement? That you have payroll, W-2 wages. So not available to the self-employed that are filing Schedule C or Schedule F on themselves. If you have a Schedule C or Schedule F and you're paying W-2 wages, not 1099 wages, W-2 wages to employees, then you've met the first hurdle. Now with that, if your gross receipts are down at least 20% in any quarter in 2021 compared to the same quarter in 2019, hear that, 2019 is what you're comparing the quarter in 2021 to. So you can take a screenshot probably a number of times that you could pause this, take a screenshot of this, kind of zoom in, go back over it. But I wanted to give you this, that to qualify for first quarter 2021, you get to compare 2 different things. First quarter 2021 to first quarter 2019. You also get to compare, if you didn't qualify based on that, fourth quarter 2020 to fourth quarter 2019. If either one of those calculations results in 2021 being at least 20% less than the 2019 same quarter, or it's down 20% 2020 versus 2019, you're in. And if you have less than 500 employees, it's all wages for the quarter. Now it's a max wages per employee. Hear that, per employee. Max 10,000 wages go into the calculation per employee. You have 3 employees making $10,000 each. That's $30,000 in wages times 70%. This is real money that if you qualify, you need to be taking advantage of. But I digress. You're less than 500 employees, it's all wages for the quarter that you're down. Max 10,000 per employee times 70%. So I just gave you an example there. How many employees do you have? Do you have employees making more than $10,000 in a quarter? Because here's the deal. You get to do this entire thing over for second, third, and fourth quarter, meaning you're comparing for second quarter 2021 to second quarter 2019. You're hearing that correctly. You do not compare this to 2020. You're comparing all of this to 2019, which is before the pandemic. So if you're down second quarter, you qualify all over again. 10,000 of wages per employee for the quarter. Same for third and same for fourth. So that's how, if this business, if they were unfortunately down 20%, all 4 quarters in 2021 compared to 19, or this one additional way to qualify for first quarter 21, is $32,000 on a business that has $12,000 in wages. Okay, that's $48,000 in wages for the year. That's not a lot of wages, really, right? So $48,000 in wages, $32,000 tax credit. Now there's a number of things to this, so I've got a playlist on the employee retention tax credit, walk you through it in detail, a number of issues related to this, how to determine your number of employees, how to do the actual comparison, do the calculations. I have a seminar, should have mentioned that at the beginning. I'll give you a link to the seminar that you have instant access to with Excel spreadsheets and all the calculations. So take a click on that. You'll see all the things that you're going to get. Well over 10 videos, a 2.5-hour seminar with a PDF walking you through any and all of that. So this is how it works for year 2021. This is a payroll tax credit. There's 4 ways to actually experience the credit. Got a video in detail on that, but in a nutshell, you either reduce down your next payroll tax deposit, or you file a Form 7200 and tell the IRS, hey, I've got this credit, and they send you a check typically within 10 days, assuming you file Form 7200 before you file Form 941. If you don't do either of those first 2 options to experience the credit, then on your Form 941, you would calculate and take the tax credit there. Know this, no matter what option you take, on your Form 941, you do need to reflect the wages that you're including in this tax credit calculation. You do calculate the actual credit, and then if you took this in advance by a payroll tax deposit reduction, or you got an advance on that tax credit by filing a Form 7200 and getting a check, then you'll calculate the the wages and the credit, and then you'll show, well, here's how much of that I already got, and then the net, or might be break even on the Form 941. Now, if you missed it, you can file a Form 941X, so that's the 4th way. Yeah, that's all complicated stuff. The seminar, I cover it A to Z. I got a playlist if you don't want to spend a few bucks to get $32,000. If you don't want to spend a few bucks on a seminar, well, I've got tons of videos in a playlist for you. So take a screenshot of this. Don't ignore this. This goes all the way through 4th quarter 2021. You should be keeping an eye on this all the way through January of 2022. Depending on where your business is, we don't know. Not saying that we're going to repeat any issues. Don't want your numbers to be down, but 20% is not a big threshold. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.